Hello, and welcome to your Daily 5. I'm Greg Harmon, founder and president of DragonFly Capital Management. At DragonFly Capital, we manage money in separate accounts for clients using technical analysis and option strategies to maintain and exceed the market averages with less risk and less capital at risk. Find out more about that at dragonflycap.com. If you're a do-it-yourselfer, we also offer a newsletter that gives a macro analysis every week, followed by 10 trade ideas on Sundays, and then earnings trades during the week. That too, you can get more detail at dragonflycap.com. Today, I wanted to talk about the equity markets in general and answer the question, after a great month, are equities overheated? The last time I talked to this crowd, was talking about how the S&P 500 and the Nasdaq were poised to break out. They were just starting to break out, and they looked really good. And what we've seen is that has played out over this time period. And now it's getting to the point where maybe things have run their course. Maybe momentum has played out to the upside, or maybe not. So I want to review those 5 charts again and see if we want to change our opinion on where the market is headed at this point and determine whether it is overheated or whether there's more room to the upside. So first, let's start with gold. So with gold, we've seen basically consolidation since last time, holding over the 20-month or the 20-week moving average, that red line in the middle there, which is a positive for gold. Those of you that are watching live today, now this is these charts are all as of Friday last week. So we've got a couple hours of market activity that have happened now, and gold has dropped down below 1950. But weekly candles, you can see it dropped below 1950 last week too and still recovered. So at this point, we still have positive momentum. We still got bullish momentum on both the RSI and the MACD, just that those gauges of momentum are falling off a little bit, but not a whole lot of pressure from gold to do anything to move equities one way or the other. The next one, and this one's maybe a little more interesting, is the dollar index. And the dollar index, you can see, had been holding steady until last week, and last week took a nosedive down from the 103 level to the low 101s. Down below that 20-week moving average, which is a big thing. It's taking a little bit of a bounce this morning, but we can also see, as we look back through time here, that the dollar index has held at about the 101 level since about April last year. We have a falling trend here that started in October with bounces to lower highs against that. So another bounce off of 101 here, as long as it doesn't get back up above 104, probably not major impact to equity markets. We do see momentum is still to the downside with the RSI falling here and below the 50 level. Never got up to where I like to see it, to see a change of character from bearish to bullish. Never got above 60. And we get the MACD in negative territory. So I think the dollar at this point is a little bit supportive of equities, but not majorly supportive. If we have another week or two where we can get down below this 100 level, 168 is about the level here now, then you might see some strong supportive action from the dollar for equities to move higher. Next one is the VIX, the Volatility Index. And you can see that the Volatility Index had been holding in this range, new range for the year from April through to June, sorry. And we've just had this drop down recently, the last couple of weeks, to where we're now at levels that had not been recorded since before the pandemic started in 2020. So we're getting into this range now where we had strong economy, markets booming, and strong equity markets at that point. Again, the VIX is also bouncing a little bit today. but still in the 14, 15 range. So still well below the range that we had from the first 5 months of the year. So also supportive of equities moving higher still. So let's look at the indexes themselves. The first one I have here is the Nasdaq 100. And we can see here the bounce off the 61.8% retracement of the post-pandemic move higher. And then the continued move up, higher highs and higher lows along the way. And a move here to where we closed last week, busting a little bit out of the Bollinger Bands. You can see we had that happen a couple times in the past month as well, and then had a reset back inside. We'd also see here that momentum is a little bit overheated on the RSI. But for those of you that are gun shy and thinking about selling first and then asking questions later, you can look at the previous times where we had momentum being extended. One got shut off by the pandemic and the crush there. The second time that we had this, though, we had a minor pullback and then a continued move higher, and momentum staying strong the whole way. So at this phase, we've still got volume that has risen all through 2022 and into 2023. So some of that was selling, and now we've got the pickup in terms of buying, and momentum strong. The MACD not at its peak yet. So there's still room to the upside, but given that we're outside of the Bollinger Bands here, maybe we take a pause here in the Nasdaq for a little bit, which wouldn't be horrible, right? We've had essentially 9 weeks in a row of upside movement and some strong moves after breaking out above the August 2022 highs. The last chart I have for you today is the S&P 500. And the S&P 500, you see, closed last week at 4409. Just before starting to record here, we were at 4373. So off a little bit today, making up for this being a strong momentum move last week that had to close outside of the Bollinger Bands. But the Bollinger Bands are still opening higher. We're extended from the 20-week simple moving average, so perhaps some sideways motion here for a little bit is warranted. Momentum still very strong. We've got the MACD continuing to move to the upside and positive. On the RSI for the S&P is not into overbought territory yet, so still some room for the upside there. And what's probably the most interesting thing here is that we've got through this whole area where there was kind of some churning in terms of accumulation and distribution in 2022 and a move up in 2023. But the last 3 months since March, there's been strong accumulation in the S&P 500. This is, I think, probably the most positive story for the market today. So what do we got here from the technicals? It looks like there is more room to the upside in both the S&P and the Nasdaq. The Nasdaq may be in need of a little bit of a pause for a bit first, so maybe some further rotation like we were seeing last week from the tech sector into the large cap sectors as well. But things still look smooth and things still look good for more upside in the equity markets. That's your Daily 5. Thanks for watching.